Today, AMC stock volume was 383% higher than the daily average over the last few months. And what we're looking at right now is, it was a nice little 7% gain on the day, nothing major, but it did break over that $3 mark and ended up closing today at $3.01. But we did have some screenshots of orders trading today, 385,000 shares in individual orders, 385,000 shares. What's going on, Quant? Good to see you. And that's a pretty substantial number, especially considering the stock price went up around 7%. But the real thing is here is, the fact that it broke over max pain and it ended Friday over max pain. Now, guys, I got to tell you, as exciting as that is, the reality of the matter is that breaking at $3.01 is unlikely to actually force any sort of market maker or hedge fund to cover. And the reason being is because it is just barely over $3. So even though there were 46,000 or so call contracts in the money at $3, almost nobody is going to actually exercise those. Because when you take into account the cost of the premium that is involved with those shares, with those contracts, it doesn't make sense financially to actually exercise those call contracts. Therefore, the market makers and the hedge funds are not going to hedge for them. They're not going to delta hedge by buying more shares, etc. So what really matters here, and what's most important about it, is the fact that 385,000 share orders are being traded. And the reason this is important is because this shows pretty clearly, in my opinion, that there are market makers and firms and hedge funds that are trading those shares from one subsidiary to another. And the key here is the reason for it. Why would a firm be trading hundreds of thousands of shares of AMC stock from, for example, their United States subsidiary to their Cayman Islands offshore sister company, or to their, Swedish sister company, etc.? The reason for this is in order to reset the clock on FTDs. So resetting the clock on failures to deliver will prevent AMC stock from showing up on the Reg Show threshold securities list. If there are too many failures to deliver, for example, over 10,000 FTDs for a period of several days, actually a couple of weeks at a time consistently, then the clock will show then it will show on the Reg Show thresholds list that FTDs are there. But if a firm sends it from their, Cayman Island subsidiary to their British subsidiary to their American subsidiary, because they're sending it in from one firm to another, that firm no longer has to report them as failures to deliver. Therefore, that resets the clock on the Reg Show threshold securities list, preventing people like you and I from seeing that and realizing that the naked shorts have never left. That is the whole point of this video, is that the naked shorts have continued to short the company without a sufficient number of shares. The market makers have continued to sell AMC stock without having a sufficient number of shares. And in order to prevent it from being seen by the regular people, by all of the millions of shareholders, remember, retail investors own 85% of all AMC shares, and then 90% of all AMC shares when you include exchange-traded funds. This is a massive number, considering these companies don't have anywhere near the amount that they need in order to close out their FTDs. And in order to prevent the FTDs from showing up, they trade them. They're called wash trades, selling it from one company to the other. This is illegal, but it's very hard to catch. And therefore, these firms do it consistently over and over again, knowing if they get caught, they're just going to get a slap on the wrist. I'll leave it as simple as that, folks. Retail has not gone anywhere. There are still millions of shareholders of AMC and GameStop diamond handing the shit out of these stocks. And the rolling of failures to deliver, hundreds of thousands of shares being traded in a single order over and over and over again, like clockwork, every month or every 2 months or every 3 months, shows you that some of these firms are trying to hedge their swap exposure. Some of these firms are trying to delay the reporting of those failures to deliver by trading them from one company to the next, their subsidiary A to their sister company B to sister company C, over and over and over again. That fucking money printer is warming up, folks. I wish you peace and wealth. We're gonna be so fucking rich. Let's go. Cheers. Enjoy your fucking weekend.